Hello investors and traders, today we'll speak about the stock market, the US economy, technical and fundamental analysis of the stock market, of course my opinion. So let's start as usual with the S&P 500. We see a decreasing channel, 5 ways move I'm expecting here, the first wave, the second, the third, the fourth and the fifth. Now it's a decreasing channel, we're trading at the highest border of this channel, and I'm personally expected another wave down. It will finish this pattern. It will be the fifth wave, most probably here. Let's have a look on the US economy a little bit. The personal saving rate, now the last figure, it's 3.4%. 1 year ago it was 4.5. Actually, how the whole last year it was about 3%. And let's move to the 5 year period. We see here the data for the pre-pandemic period, the pre-coronavirus. It was about 10%. Now it's less than 5. So we see the personal saving all last 2 years actually decreasing. So the interest rates aren't very high. The Fed continue to aggressively increase interest rates. Now it's about 4.75%. And we see that the savings of the population continue to fall. So just guess what will happen if, for example, the Fed will hike its rate to 6% to 7%. I think it really will be an issue for the population, for people. So, and it will be very interesting data on the next week. Of course, the 14th of February, the CPI, the inflation data will be released, and I guess it can significantly influence the market. So the last data, by the way, for the inflation, let me check, let's find this figure. I guess it was about 6%. 1 minute. Let's find it. Yeah, the last data is 6.5%. So of course we see it's decreasing year to year. It was more than 9%. Now the last data are just decreasing, but don't forget, okay, it's decreasing, but it still continue to grow. The temp is decreasing. It's not 8, not 7, but still the prices are rising. Don't forget about this point. It's very important. So we saw that the saving rate is very low, the interest rate, the Fed fund very high. So we will watch the inflation on the next week, of course, and we'll see what will happen. But I'm personally not so enthusiastic about the stock market, and I'm just watching. Of course, I continue to buy dividend stocks like Philip Morris, like AT&T, like Coca-Cola, but growth stocks, Meta, Google, I think it's a little bit dangerous. So let's see what will happen on the next week, of course. Let's move to new chart, new illustration. Here we have the global central bank policy rates. So we see all the countries. So the first point, the last move, we see the most of the countries are hiking their interest rate, except Japan, China, Russia and Turkey. And also please pay attention to the real central bank rate. So now it's negative in the most of the countries. Of course, real interest rate, it's the central bank rate, counting the CPI, the inflation, and then we receive the real interest rate. So it's the only countries it's positive is China, about 2%, Hong Kong actually it's the same, Saudi Arabia about 2%, Indonesia, India, South Africa, Mexico and Brazil. By the way, please pay attention, Brazil is very high interest rates here, more than 13%, and it's fighting the inflation. I guess the inflation here is decreasing. And another one, so what I would like to mention here, please pay attention to the CPI, especially in the Eurozone, in European countries. We see here that in Denmark the inflation about 9%, the Eurozone at whole about 8.5, Norway about 6. So generally speaking, Canada more than 6%, the US of course 6.5%. So in most of the countries, for example Poland, the Czech Republic, and of course we have such countries like Turkey more than 50% inflation, and Argentina of course about 94%. So it's a lot. So we still now just at the beginning of the year, but still we see that the inflation is very high, and of course your yield, if you for example buy government bond or some secure government secured assets, so you just will lose money because of the inflation. Of course your interest, your real rate, your interest real rate will be unfortunately it will be negative. And another picture, so the reporting season in the US continuing. We see that in this week we'll find another interesting and attractive reports, company that will report on this week. So for example, I'm very interested in Palantir, in SolarEdge. I made about 50% in SolarEdge company. Actually we just may check its chart now. Coca-Cola, of course, the dividend stock, one of the top dividend stocks in my mind. Also here we have Shopify, grow company, Kraft Heinz. So let's have a look on the SolarEdge company for its data. So it's 300 bucks. Its performance only 2% since the beginning of the year. So look at this one. Here, if we'll check the chart, of course it's increasing trend line, and my trade was I guess here it was a report, so I bought it about 200 bucks and sold it about 300 bucks. So actually I made in few months about 50%, and I sold it. Why? I think here we have the fourth wave, and of course here is just a channel, not something special. And another point, the SolarEdge, it's a company. Let me tell a few words. It's about this company. It's produce electrical products, some saving panels. Here important thing I would like to tell you. First of all, the P ratio. P ratio is more than 100, so it's a lot. I remember Tesla for a long time had a very high P ratio. So now SolarEdge also P ratio more than 100. It means that your investment can pay back you more than 100 years. So it's a lot actually. And look, but just look here, this figure I guess will tell you a lot. We see that the revenue continue to grow. Okay, it's good. Net income also grow, but not so not in such fast temps. That's why we see that profit margins, the efficiency of this company decreasing. We saw it was 3 years ago it was 13, then 10, 9, and now it's only about 8%. But if we'll look a little bit closer to the quarterly data, we can see that it was 10, even 7, 5. A few quarters ago it was about 2%, and now it's also 3%. So very low marginality in my mind. The marginality of this stock is really very low. So if I buy growth stock, I would like to see the marginality increasing, but in this case we see in a yearly basis, in a quarterly basis, it's decreasing. So in my mind it's a problem. And also from the chart we see that it just traded last 2 years in range, so not something that very attractive for me. And the PE ratio, as I told you previously, here when I bought it, okay, it was 15, 14. It can be applicable, but here it's now, I think it's really very expensive. And for me, I can hold my portfolio such stocks with a P ratio of 140. So for me, I just can't let it to myself. That's why, of course, SolarEdge I sold. Another interesting company that will report on this week, it's Palantir. It's IT company, technology company. So in my mind here it was Impulse. It was the first wave, the second, the third, the fourth, and the fifth. Now it cost only $7. In my mind it's very cheap. But still, if we'll check here its fundamental parameters, it's not stable. But actually it's improving. Yeah, it's improving. We see the revenue showing a nice growth, and the marginality also improving, but it's not stable. We can see here, okay, revenue improving, but sometimes we see a net loss about 100, about 200 million. So it's still not such a stable company. The market cap, it's not so, it's in my mind it's a small company. So in my mind the Palantir also can be interesting stock, because here, by the way, this level, let me see, it's a wide one, and this level, it can be some kind of support level. Actually now we traded very close to this level. If we break it, and the pullback will be done here, and we can see the stock much higher, and of course if the correction finish here. So generally speaking, all eyes on the 14th of February, the data of for inflation in the US, and it will give you a hint for the stock market direction. So if you like this video, press the like button, don't forget to subscribe to my channel, and see you on the next time. Bye.